Most traders lose not because they're completely wrong, but because they're early or they're even entering in the wrong place. You see, there's one part of the market that all traders completely ignore, and it's exactly where smart money enters and where the real money is made. I'm talking about a retest zone after displacement, typically a fair value gap or sometimes a clean order block. But the key is this: price runs liquidity, breaks structure, and then it pulls back, and it's extremely simple. Most retail traders are already stopped out or chasing by that point, but smart money is getting in, and this is where I enter. You see, I used to miss this all the time. I tried to catch a breakout or I'd get trapped on the wrong side of the market. Once I started waiting for the pullback into the imbalance, the order block, or even the fair value gap, you see, that's when everything changed. Now I use this setup almost every day, and it's part of the reason I'm able to stay consistently profitable while most traders struggle. In this video, I'll walk you through why this zone matters so much, what to look for, and how to time your entry so you're trading with the move and not chasing it. Most traders will miss it, now you won't. So let's break it down. Strategy is super simple, and if you do follow it, you'll be guaranteed to pass your very own challenge and potentially get your own payout if you do follow it correctly. So this is a professional trading plan, and I've made this for you guys. So let's go to the time zone and the chart setups. So for your time zone, all trade setups will be based on UTC -4, which is New York time session. So just ensure your trading platform reflects this time zone. This is really, really important. And where can you find this? You can find this at the bottom right of the screen, which is right here. You'll just look for UTC -4 New York. And yeah, you should be able to find New York pretty easy. Let's go to the time frame. The time frame you want to be using the 5-minute time frame for chart analysis and execution. So right up here at the top, you can see you have the 1 minute, you have the 3 minute, you have the 5 minute. You just want to select the 5-minute time frame. Super easy. So the way this strategy works, again, like I said, it's easy. Before our trading time, we won't do absolutely anything. So the market conditions we'll be looking for is liquidity zones where price is likely to react off of previous highs/lows, equal highs, equal lows, or consolidated areas. So if we look closely here, you can see this high here can act as a liquidity point, or this low here can act as a liquidity point. And we'll also be doing it before our trading time. So let's say before our trading time, we already had that set up and we've had the market structure shift way before our trading time. We can actually do it as well. So you can see we have liquidity sweep right here, and we can wait for liquidity sweep during our trading time if there was none prior to that. Structure identification, you want to wait for a break of structure that signals a shift in the market direction. Your entry zone after the break of structure will be to wait for a pullback into an order block, fair value gap, and confirm alignment with the market structure and liquidity sweep before entering a position. So it's pretty simple. Now again, if you guys want us to manage your funded challenge and get you a payout, and you don't pay a single penny until you do get a payout, click the first link in the description. We'll explain to you how we've helped hundreds of traders actually get a payout without paying a single penny until they got a payout. So again, you keep 70% of the profits and we take 30%. But as you can see here, let's start with this example. So before our trading time, if we do have that setup, as you can see, everything makes sense. We have a liquidity sweep, we have a break of structure right here. What we can actually do, if you want to, you can mark it out. As you can see, liquidity sweep, break of structure, and then what we can have is boom. We can have our order block right here. So what we could actually do is wait for price to then retrace into this. Boom. Boom. And then we can take it to a nice 1 to 2 R. Really simple, really easy, as you can see right there. We'll put our stop loss just above the high. And again, as always, we'll target a 1 to 2 R. So what I forgot to actually mention is that your stop loss should be at most 10 pips wide in certain cases. So you want to have a stop loss that's 10 pip wide all the time, and you want to target 1 to 2 R on that 10 pip, and that's 20 pips. You don't need to target any more than that. You don't need to go to 1 to 3 or even 1 to 4. 1 to 2 R on 10 pips is completely fine. For this bit, let's say that it took the high. It's gonna be exactly the same thing as this example. Other than that, it's just going to be inside of the trading time instead, and you can find your trade. You can find your order blocks somewhere within there. So let's actually get into this example, the moment you guys been waiting for. So let's get into it. So really simple. You can see we're on a 5-minute time frame. Everything's looking good, and we're just gonna let the market do what it wants. So if we look closely, we can see we already have a liquidity sweep going on. So it's been taking some trendline liquidity along the way. As you can see, we did end up taking out a low right here. So you can see we did end up taking out a valid low right here with a market structure shift in displacement. So we can actually mark that out. And yeah, so what we'll do is we'll look for a 5-minute order block, which is actually right here. So you can see we have a 5-minute order block right there. So what you can do, you can enter off of this 5-minute order block. Like I said, your stop loss should be at least 10 pips wide, and you'll target a 1 to 2 on that 10 pips. And again, like I said, that's more than enough profit. You know, that's perfect. There's 20 pips in one trade. So let's just see how that does play out. You can see it does end up coming back into our trading point, and then it starts to distribute towards the downside so nicely that it does end up going much lower than we actually anticipated. So it does end up going to about a 1 to 4. I think it does go lower. Nope, as you can see, it does have a reversal after. So it doesn't end up going lower, but it did make it to 1 to 4, which is brilliant. And you know, that's what we want for consistent trading. So now let's get into the next example. And again, if you guys want to pass and manage your funded challenge, is guaranteed, and get you that payout, again, click the first link in the description. Super easy, super simple process, and we'll explain to you how we've helped hundreds of traders do the exact same thing. So we come to our next trading time, as you can see right here. Boom. So as you can see, we have our next trading time. So before any of this actually happened, you can see, like I said, the move can happen before our trading time. So you can see how we have this liquidity sweep right here. Let's just mark that out. And then you can see how price ended up taking this structured high right here. So once price has done all of that, what you can see is we have an entry point right here. We have this 5-minute order block right there resting. So what we could do, we could wait for price to fill that. And again, as always, we aim to target a 10 pips stop loss. So just about 10 pips is really good. And then on top of that, we'll target a 1 to 2 risk to reward ratio. So like this. And it should be, you know, about 20 pips. Just about 20 pips. So as you can see, it does retrace in. It does fill our stop loss, but it doesn't take us out. And as you can see, it starts to distribute, and we do end up making 20 pips profit. So if you guys did enjoy this video, don't forget to like, comment, subscribe. And again, if you want us to pass, manage your funded challenge, and get your payout guaranteed, click the first link in the description.